Good morning, good morning. Well, I think we had the perfect segue from that panel for us to dive in deeper into the topic of ZK for institutional finance. I'm Diana Biggs, partner at 1KX, and joining me on stage is Alex Cordover, CEO of Tradable Financial, and Gobi Nadesh, who is Senior Product Manager at WonderFi Labs. So blockchain adoption has happened in certain pockets, but we're yet to see really substantial adoption from the institutional front. You both are coming from very different businesses. I'd love to hear from each of you about why you've chosen to move forward with this technology.
Sure. I think there's a lot of excitement, especially from the institutional financial sector, about blockchain technology. I think, though, that a lot of institutional financial folks don't even know how to get started in the space right now. We've seen a lot of adoption over the last couple of months in particular, but I think the promise of, blockchain technology, the crypto ecosystem in general, is that kind of next generation of stability, security, interoperability, and scalability for financial institutions. I mean, most of the folks in the world, especially on the institutional side, they're operating on really old technology, or they're very, very delayed in adopting technology. And so they see this as kind of a reset of sorts, of being able to adopt that next generation and kind of work with the rest of the world, come to the future, essentially.
And Tradable had its origins spinning out of a global asset manager.
Correct. So Tradable spun out of Victory Park Capital. It was a joint venture between Victory Park Capital and Spring Labs. Victory Park is a large asset manager, large global asset manager based in Chicago. And the essential thesis was that all transactions, or some major part of them, is going to go on-chain in the future. And as an asset manager, Victory Park wanted to help shepherd and lead, as opposed to follow with, what could end up being subpar technology, if not for the institutional expertise that it had.
Fantastic. And WonderFi.
Yeah, thanks for having me. So history of WonderFi actually started in 2017 as a DeFi business out of Vancouver. But as some of you may know, in 2017, when market conditions changed, the co-founders at WonderFi decided to kind of switch gears and realize that retail wasn't really ready for DeFi at that point, and switched into actually making it easier for users to on-ramp into this kind of world. So this is when WonderFi became more of a centralized exchange business, and they acquired both BitBuy and CoinSquare, which was two regulated exchanges in Canada. And so now WonderFi is the largest regulated exchange for retail users in Canada. So now, 2024, 2025, we've decided to kind of go back into the DeFi space. And so we've spun up WonderFi Labs inside of WonderFi. It's a very small team of 8 people right now. And so our focus is actually building on now bridging those users who are using the centralized exchange and actually allowing them to bridge into the DeFi space and Web3 space. And so we've launched our own chain built on ZK Stack, Wonder Chain, which is on testnet right now. And the goal really there is to address some of the core problems we've seen for users who want to adopt into DeFi and get into the Web3 space, and trying to solve some of those problems with our unique implementation of ZK Stack and our chain.
And Alex, you alluded to this, and obviously for us, we're big believers that all financial transactions will go on-chain. Why was that apparent to you? Why do we believe that this is the way forward?
Yeah, so I've been around Bitcoin, crypto, for about 15 years now. I was on some of the original, Bitcoin forums. I made 2 great investments in my life. One was buying a bunch of Bitcoin for $1 and then selling them all for $40 each, which, considering now, maybe not such a great investment. But then the other one was tracking the crypto, ecosystem, or the blockchain ecosystem, all the way up to where it is now. And I think we've continued to see not just problems come up, but solutions come up. There's been a lot of solutionism, and I think we've seen that this is a serious ecosystem that can grow, that can address problems that it has, and ultimately, every time that we run into a problem, there's a new solution that comes up. I think, the existence of things like ZK Sync, zero knowledge proofs, we can obviously get into some of the promises of those, but we've continued to see this growing adoption over the last 15 years, and in a technology that promises essentially to, be that next layer, that next generation of financial transactions. I think that as we see more and more adoption and more lean in from traditional financial institutions, that promise is only going to continue to grow. We can say a lot about the specific underlying technology, the reasons why I think, the promise of interoperability or the promise of like standards-based technology as opposed to kind of the mishmash of Web 2 tech is better. But I think it's just fairly apparent that's where the world is going.
Let's dive into that, because I think these early decisions around which technology to build on, and today we have a lot of different options regarding which stacks could be used. What were the unique challenges or requirements of your businesses, and sort of walk us through the evaluation of what led you to go with ZK chains?
Yeah, for sure. I can start there. So when we were launching Wonder Chain, there was quite a bit of discussion that we had in terms of what tech stack that we were going to be using. And the way we approached our L2 was looking at core user problems for people who want to onboard into the DeFi Web3 space. What are the kind of biggest challenges that they face? Wallet infrastructure is one part of it. The other part of it is kind of this gas token paradox. So people who want to go on a specific chain and interact with a protocol, they might move USDC from a centralized exchange account to a wallet and try to interact with that application, and the first thing they're hit with is like this need for this other token to pay for gas, which sometimes seems very arbitrary or irrelevant. Like, why do I need this specific thing to do this one thing that I want to do? And so gas token paradox, I think for people who are in the space, they're very knowledgeable about that, and they're very used to that. But for new people coming in, that's a huge hurdle. And so the reason why we kind of went with ZK is their paymaster implementation that we can implement at the chain level to be able to subsidize transactions. So if a user is just simply trying to onboard onto a platform, which is a non-time sensitive transaction, we can actually subsidize those transactions to make that process smoother and easier. And I think we chatted about some challenges that people have even in onboarding to certain platforms. Sometimes takes days, back and forth. These are not time sensitive transactions, and they really could be subsidized without having to force a user to go and get another token to pay for gas. And so that's one of the big reasons we kind of settled on ZK.
Yeah, for us, when we were evaluating spinning up Tradable, spinning out Tradable 2 or 3 years ago, we knew kind of from the get-go that we needed some semblance of zero knowledge proof, right? The previous panel alluded to this, but the promise of kind of privacy, security, and then interoperability is what we were indexed on. For alternative asset managers in particular, they're very privacy sensitive. They're very sensitive to potentially side channel attacks for information, or just quite frankly competitors being able to over-index on what any particular firm is doing. So we knew we needed to have privacy, but we also knew that we wanted to build Tradable on a public chain, right? There's still an enormous opportunity for on-chain distribution. I think that world will come, but all the capital formation to date has been on public chains. It doesn't do anybody any good if everything is done on a private chain and then you can't, play in the sandbox with anybody else. You've got to be able to work with the rest of the world at the end of the day. And so when we try and balance privacy and security with the goal of interoperability, I think ZK chains were, quite frankly, the only true path forward. When we were evaluating building up Tradable, this is back 2 or 3 years ago, ZK Sync was clearly head and shoulders further along than anybody else, quite frankly, and they've been exceptional partners to date. They've continued to be very responsive, building new technology. I think, it's excellent technology, and it is essentially table stakes for getting a traditional financial institution to adopt the technology, to have that promise of security, that promise of privacy, but also that promise of interoperability with the rest of the world.
From the retail perspective as well, are you seeing the demand there, or is this sort of the beginning of the journey?
I think it is the beginning of the journey for retail users, at least in Canada. We've seen implementations of this, like larger centralized exchanges that launch their own layer 2. And so, especially for Canadian regulated space, there isn't really much of an avenue for those users to seamlessly bridge into DeFi and Web3. And so, we're kind of hoping to be the trailblazers there with our ZK chain. And I think interoperability is kind of, as Alex alluded to, the biggest kind of benefit of having like ZK infrastructure with their elastic chain infrastructure. You basically have an ecosystem of ZK chains that has underlying interoperability kind of built in. So yeah, I think so.
So talk us through the use cases. You have met the requirements in terms of the privacy needs, and you've sold them on this. Where are you seeing the demand?
Yeah, so Tradable, for those who don't know, Tradable is a private credit marketplace. It is by institutional finance for institutional finance. And I think, adoption to date has been, especially considering the kinds of assets that Tradable has, these private credit deals primarily, adoption has been from traditional financial institutions. Most of what gets sold or transacted on through Tradable is a private institution or a private manager originating a deal, and then some portion of that potentially being purchased by a traditional financial institution. We actually haven't seen a ton of lean in on the on-chain native distro side of the house. We can theorize why that is. I think there are maybe some investor mismatches or expectation mismatches about liquidity, but Tradable is very much in the business of meeting people where they are today, because we do know that transactions are going on chain. We do know that in 2, 3, 5, 10 years, whatever it is, that all these transactions are going on chain. We want the traditional financial institutions to trust us, to trust that we've done all the hard work of tokenizing these things correctly, building the smart contracts for interest and principal repayments correctly, whatever it is, so that in that new world, they trust us to do, essentially be their shepherds into the space.
And are you seeing that early adoption?
We are. I don't want to share too many metrics right now, but we've seen a lot of lean in from traditional financial institutions from all over the spectrum, from family offices all the way up to obviously we've got a bunch of global banks here represented.
Fantastic.
Yeah, I think on the retail side, right now, as a retail user, your assets are kind of divided into these 3 different classes. So you'd have fiat with traditional banks, then you have your equities, bonds, probably with a brokerage, and then you have retail users who are adopting crypto as well with centralized exchanges. There's definitely a huge appetite that we've seen from retail crypto users who move their funds off our exchange into private wallets to interact with DeFi. But I think there's a huge appetite for institutions to also tokenize those equities and bonds to be able to give users who are already trading crypto a really easy way to transition and purchase those assets as well that are much more liquid and can be used, for example, as collateral in other places. Right now, you're kind of locked in. If you're with a brokerage account as an end user like myself, you can buy and sell equities there, but that's really all you can do. So the ability to kind of have interoperability where you can take those, let's say if they were tokenized on chain, and even trade them or use them as collateral, there is an appetite for end users on the retail side to get into some of those investment opportunities.
So what would be the next step for the unlock for adoption? Where are you seeing maybe there's still some barriers to entry when you're having these conversations? What are people looking for next?
To pick up kind of where Gobi left off, he used the example of getting a loan or something or participating in DeFi more broadly. I think right now that is the most difficult thing for traditional financial institutions to stomach is the permission versus permissionless barrier, and then being able to fully dig into the true promise of DeFi interop, right? That is much more of an underwrite or much more of a difficult, thing for a traditional institution who's, to be clear, their remit, their mandate is not to adopt new technology. Their remit or mandate is to, do right by their investors. And so until they see a clear value proposition to adopting DeFi and all the promises that it brings, which to be clear, there are, secondary market transaction, things like Uniswap, Aave, whatever, there are plenty of reasons that you would want to get into DeFi, but until there is that killer use case, or until there is that, alignment of interest between the, call it the alternative investment or the alternative asset investor and, DeFi more broadly, I think we're going to see a little bit more trouble trying to coax the institutions into adopting, full in on DeFi. I think we're going to see people build towards that. I know there are now, verified pools or whatnot, things like that people are starting to build towards. Quite frankly, I think those things are table stakes for institutional adoption. And so over the next, 12 to 18 months, it'll be very exciting to see who leans in, who's willing to kind of lead from that perspective. But until we get there, I think that there's still a little bit of a mismatch.
Adding to what Alex said, I think there's definitely a few hurdles on the institutional side. I think in the previous talk they were talking about decentralized identity being a huge factor right now in terms of onboarding users, doing that KYC, AML, and from a compliance and regulatory perspective, having a set standard that institutions would use. And I think right now the early exploratory phase that institutions are taking is still kind of closed ecosystem. So it'll still be kind of siloed, kind of chains, privacy-focused chains for their specific use case and for their specific clients. But I think the beauty of interoperability on ZK's Elastic Network is you can actually have a purpose-built chain that deals with decentralized identity that institutions can agree on being the standard. And then, with zero-knowledge proofs, you can have the ability to show, like as a verifier, I can show to a person, hey, I have these credentials without actually exposing the underlying data. And if there is agreement on that type of standard and there's regulatory clarity there, I think that opens up a lot more use cases, especially on the Elastic Chain Network.
And now that we're getting that increasing regulatory clarity and we have the underlying tech stack, what opportunities are you most excited about when we look at the next 1-2 years of where you're both headed?
Yeah. Well, not to be too kitschy, but it's in the name, right? We want to make the world tradable. We're going to start with alternative assets, and then we're going to expand from there. There's so much out there in the space. If I want to be able to, swap some of my commercial real estate exposure for some of your, consumer lending exposure, I should be able to do that on a decentralized exchange and not, have to hire an investment banker who's going to tell me I have to take 80 cents on the dollar after 6 months, and then, he'll stack on his 5% fee after that too, right? Disintermediation is the big thing, transparency, and essentially once everybody is on the, call it same standards, or everybody's in the same sandbox, I think you get to a much more interesting, much more interesting world. We saw this with Web 2 financial transactions and how it kind of opened up the globe to substantially more in the way of essentially people working together and people being in the same ecosystem. I think we're going to see that for TradFi.
Yeah, on the retail side, I'm just very excited for retail users to have access to more complex financial investment products. Like right now, DeFi exists. There's other opportunities like Aave where you can do collateralized, over-collateralized type loans. But I think there's a lot of opportunity for established players in the TradFi space to bridge some of their existing investments that they have into into the DeFi Web3 space and give retail users access to some of those more trusted names and trusted products to invest in, giving them like a real alternative to doing things on chain as opposed to just buying and holding crypto assets.
Fantastic. Well, a lot to look forward to. Thank you both, and thank you, everyone.